Hello, this is Jessica Hale, and I'm part of the SONAR customer success team over here at FreightWaves. I'm going to go through a SONAR 101 with you today to show you high level how to navigate through the platform and as well how to get value out of the platform immediately. When you very first log into the SONAR platform, this will take you to this screen. This is our global page. This is something that you can play with, but it is not super customizable or editable in any way. As you can see on the left-hand side, the bottom left-hand side are our global pages. These are all of those pages that you can view at any time. They do change from time to time, depending on data sets or features that we do have released, but you cannot edit them or customize them. But those are always available to you when you immediately log into SONAR. The top left-hand side is our apps. This has our alerts management, passport, engage, predictive rates, critical events, and fuel. All of that is available in the app section also at any time in the platform. Your My Pages is the middle. If you do not currently have any pages, it will be blank as like this is showing right now. When you start to add pages, you will be able to name them whatever it is that you want, and they will save in your My Pages, and I will show you that in just a second. There's a couple features in the top right-hand corner that I think are really helpful. The first one is our moderated chat function. Our moderated chat function is where you can comment, ask questions, anything along those lines that you want an immediate answer to. We have a team that watches the SONAR chat that is available to you. As you can see, we have some numbers and some letters. The letters are FreightWaves employees and the numbers are SONAR users. And that is all SONAR users, not just in your company. The next is Engage. Engage is for Engage members for the TCA benchmarking. You are not able to view this unless you are an Engage member. If you would like to know more about this, please email sonarsupport@freightwaves.com. The next one is Sue Says. Sue Says is our messaging board. This is where we will provide new updates, features, data, event ticket availability, something new coming in SONAR or FreightWaves. This is all available in Sue, and you can go back in time to see everything that we've ever released. The next is our research, our market insights and research. This is one of my favorite things that we have. This shows everything from deep dives, research papers, daily watch, week ahead, anything along those lines. And you can download them and preview them and share them with others in your organization as well. So for example, if I wanted to view the week ahead, you can click preview. It will show you a quick little preview and you can download it and, like I said, share it with other people in your company. This is a great way to stay up to date with the different things going on in the market, all in one place. The next is My SONAR Tools. My Custom Indices is where you can upload your customer or your company's tendered information. So your volumes, your rejections, and compare them to ours in SONAR. So it's a form of benchmarking in the SONAR platform. My Map Layers is where you can upload customer locations onto a map. So say you have a customer with 15 different locations, you could upload their addresses and it will appear on a map. You can then overlay other data sets to see what volumes and rejections are like in those specific markets. Alerts management, which is also available in the apps function. Alerts management has a way that you can add an alert for a specific data set. So if you wanted to identify if volumes are up 5% week over week in a specific market, you can set those parameters for each data set and be able to, it will send you an email every morning at 9:30 Eastern time if those parameters are hit. It's a great way to have information pushed to you without having to go in the SONAR platform all the time. The next is our Freight Futures. This is through our nodal exchange. If you are interested in Freight Futures, this third button right here will be helpful for you. Or you can email sonarsupport@freightwaves.com and we can get it to somebody that can answer all of your questions. The next part is our Knowledge Center link. Knowledge Center is a great way to get information about how to use the Sonar platform immediately. If I click on this right here, see if I can get it to populate. There's a search bar right here, or you can scroll down and see Get Started, Navigate Sonar, Understand the Data, and our Exchange platform. We also have different things to FreightWaves TV, use cases, index reference guides, data set definitions, webinars, all kinds of stuff right here for you at a click. Understand the Data is probably one of your most important. It lists all of our Sonar categories for you to dive in and explore what they are and what they mean to you. So if you want to know a little bit more about our market volume insights, you would just click on Market Volume Insights and all of the data sets will appear. Once you click Read More, it will dig into what exactly that data set is, what different varieties we have of that data set, and what does it mean. Now that we've kind of covered everything in the top right-hand corner, the features of Sonar, let's dig into how to build a page and what are some good use cases for this. So to build a page, all you do is click the Add Page button, and you will name it whatever it is that you want to name. And I'll just name it Sonar 101. Click Save. And this will take you to your plain blank screen to dig into as much of the data as you want. All you do is go up to the blue plus sign, select on the widget that you want, and then it will populate to your page. I'll add a couple on here just to show you how they look. So if I want to look at a chart, and then I also want to look at a map, all you do is go back up to the blue plus sign and click on Map. When you have both of these widgets up, you can kind of customize it a little bit. We have the spacers in the middle where you can move it up and down or back and forth. You can also take the top little tab and move it around the screen based on how you want it to view. That's a little bit of how to build a page. We have videos associated to all of our widgets that tells you all about it. So if you head to our video library in Sonar, it is also available in the global pages right here. You'll be able to watch those videos and learn how to work those specific widgets that you're interested in. I already have some custom pages that I have built over here that I'm going to go over and show you some use cases. There's a couple that I'm going to show you today that will show you high level what is the market doing. We'll show you how to use data sets to make operational day-to-day decisions. And then I also have a page that shows you where can I get more freight. So let's talk about this. And like I said, if you guys ever have any questions, use the moderated chat function or email sonarsupport@freightwaves.com. We're here to help you. This page is what I call the US summary page. This page is your 30,000-foot view, those news headlines that you read first thing in the morning to get you up to date with what's happening in the world, or in this case, in the freight market. What you're looking at here is the Outbound Tender Volume Index. It is the tender volume flow through the United States of America. The blue line is 2019 into 2020. And the green line is 2018 into 2019. So it is year-over-year comparison. Down in the bottom, we have different date ranges that you can view this information. So if you want to look at a 1-month view, which is close up, a 1-year view, or what I also like is a full year view. This will show January 1st to December 31st on a full year outlook. I'm going to click back to 1 year real quick and talk about the volumes a little bit. Our volume index started on March 1st, 2018, and it was indexed at 10,000. This is 10,000 basis points. So this is not 10,000 loads. This is just an index. It's a baseline that we created on March 1st, 2018. What the numbers you're looking at today is just relative to that specific day when this index started. The numbers don't necessarily matter. It's just how much they've grown or how much that they've decreased over that whatever period of time you want to look at. So you can see in 2018, we had a huge volume right here, huge tendered volume, which everybody, I believe, felt in that market. And if you zoom into today, it shows that we are slightly above year over year when it comes to tendered volume. And you can kind of see that started, I guess, the middle of February, and we've been relatively steady higher than we were the previous year. So you can use this to gauge if, you know, the tenders volumes in the nation are increasing or if they are decreasing. All of these troughs are holidays. So this one specifically is Memorial Day, July 4th, Labor Day, Thanksgiving, and Christmas and New Year's. And those are what those big troughs are. The carrier sentiment to the market is our rejections. So if I hop over to our rejections, this is going to tell us the carrier sentiment to the market. So I have year over year on here for outbound tender reject index. There's a reason why people reject freight, whether it's there's other options in the market, could be price related, could be the lane direction related, could be weather. There's a lot of reasons why that happens. The good thing to note is the freight still needs to get moved from point A to point B. It doesn't matter how big or how small the rejections are. There's still freight that needs to get moved. So when people constantly reject freight, that increases the price of that specific load or loads in the market. So in summer of 2018, we had rejections that were upwards of 25%. 1 in 4 loads being rejected during the summer of 2018, which is a huge amount, especially when you're looking at it on a nation view. When you have such a great amount of rejections like we did in 2018, that is what drove the prices up in the market, because people were constantly saying no. Like I mentioned earlier, when people constantly say no, freight still needs to get moved from point A to point B. So a lot of times what will happen is these rejections will fall down the routing guide, or they will go to the spot board, and that will the load will cost more money with higher rejections. Or loads will sometimes get, if they're not super important, they'll wait on in a warehouse until market conditions change. They will chop them up into an LTL shipment, or maybe it will be sent over, an intermodal lane. It kind of depends on the shipper's needs, but what we do know is when rejections start to increase, when people are feeling a little bit of pressure, they will pay more money to get their freight moved. This is the same type of chart as the one previously in volumes, but it's rejection. So 2019 into 2020, 2018 into 2019. Most of 2019, we stayed below that 7% mark until we got around the end of November and into December. And here we are today. If you were to zoom in, we are at a 5.5% rejection rate, so 95 almost percent acceptance. That is a big number. Almost everybody is accepting their freight. Year prior, we were about 2% higher at about a 7.5%. So this is the soft market that everybody is feeling. Volumes are slightly up when it comes to tendered volume, but when it comes to rejections, they're still relatively down. So there's a lot of accepting freight moving in that market. There is a couple things that we do. So what I showed you before, we have, the national level. We can break this down through our 135 markets for volumes and rejections. So if you want to look at rejections in the Atlanta market, we have that available to you. The next question we get a lot is, do you have different equipment types? And yes, we do. You can view van, refrigerated, or flatbed. Flatbed is only available on the national level just due to their tender process. A lot of flatbed shippers tend to rely to their old school ways when it comes to tendering or calling their carrier providers or faxing or emailing a tender over, when van and refrigerated are a little bit more on that tendered basis electronically, which is how we receive all of this information. So you can see the yellow line is refrigerated rejections and the green line is flatbed, while the white line is van. Like I said, this is electronically tendered freight that we receive, and it is updated every 24 hours. So van and reefer, like I said, you can break down into our market size, but flatbed is only available on the national level. The second half of the, or I'm sorry, not the second half, another granular level that we have is our length of hauls that you can view. You can view our length of hauls for van, our length of hauls for rejections. What you're seeing here is the different length of hauls we have available. So in blue is our local, which is 0 to 100 miles. In pink is our short haul, which is 101 to 250 miles. Our mid haul is in green at 251 to 450. In orange is our tweener from 451 to 800. And in purple is our long haul, which is 801 plus miles. So although you can see all equipment types, you can see a specific equipment type, or you can look at length of haul, volumes, and rejections to identify what specific mileage band might have a little bit more of increased price pressure. The last thing I'm going to show before we get to the daily operational use case is this OTRI compared to spot rates. So the blue line is our outbound tender reject index, which is what I went over. It's the carrier sentiment to the market. I said when rejections start to increase, price follows that. I have this compared to our national spot rate index, rate per mile, I'm sorry, not an index. This is line haul only. This is no fuel, no accessorials, and this is taken from DAT. So our most recent data point is on the left-hand side. It says $1.32 for DAT. And on the right-hand side is our outbound tender reject index at 5.68% rejection rate. So what I think is cool about this index is it shows when rejection rates start to increase, price follows that. While rejection rates start to decrease, price follows that as well. There's very good correlation in these two indices to identify and kind of buy into that statement. When rejections increase, price follows. When rejections decrease, price follows. And that's kind of what you're looking at here. You see those peaks and you see those valleys and you see how closely these two correlate together. The thing to mention is DAT's rates are slightly delayed due to the fact of it being actual financial data. So when the load is delivered, it is reported. That is when DAT gets that information. Ours is taken in the tendered process. So when a load is tendered over and rejected, that is when we see this. That's why we can have this every 24 hours and get this information with 1 day lag. So when you're looking at a DAT rate, like I said, the most recent data point on a national level is at $1.32. And what we see here is what's happened in that last week. And this was last reported, looks like on the 14th. So in the last week or so, you can see where what's happened in the market. You can see visibility into that market. Although it's been relatively flat, so that price might not really change very much. But if you are looking at when a market is increasing or when it is sharply decreasing, you can make actionable decisions on that. So for example, if we were to look on December 15th, rates were about $1.50. And our data set, the rejections was about 8% or so. If you were to look 7 days in advance, you would see that our rejection rates were already about over 12%. So rejection rates have increased significantly, but you're still pricing based off of understanding that our rejections are 8%. So you're not seeing what has happened in that market. So you're possibly underquoting. You possibly might have some issues in the next week covering that freight that you're taking because you didn't have visibility into that market, which nobody has until SONAR. On the flip side, you could be doing it the opposite way. You could be looking to see this is at $1.56, 7 days in advance. We're at a 9% rejection rate instead of a 13% rejection rate. So with this decrease right here, you could be losing out on opportunities because you're pricing a little bit too high based off of looking at DAT. So it gives you some information about what's happening in the market outside of DAT, outside of your own feeling, and outside of your historics. I had this happen many times in my previous life when I was working at a brokerage on the customer team. We were taking a lot of freight out of a specific market and wanted my team to go after that freight because we were making money. Well, when it came down to that day to pick up, 4 days in advance, we were struggling to get that covered because of the margin compression, because of what happened in that market that we weren't able to see. So when you are able to actually see what's happening in the market, instead of relying on old information, that is a really valuable thing when you're making decisions on the day-to-day. So this is kind of a high-level overview of what you can do with SONAR. I'm going to go down to the daily dashboard view, which is what I have right here, and talk about daily use cases that could be very beneficial. There you go. On the right-hand side, I'll start talking about the head haul index on the map. The head haul index measures outbound tender volume and subtracts inbound tender volume. So it's really good to kind of think about loads that are going outbound. They're loads, available in that market, ready to get picked up. Inbound into that market are, trucks coming into that market to get empty and find another load. So it is the balance or imbalance of a given market. All of these white markets that you see, they're balanced. The same amount of outbound, same amount of inbound. I would kind of take what you get in those markets because there's not an abundance amount of capacity in those white markets. So if you have a decent truck with a decent rate, I would take that, whether you're a shipper or a broker. If you're a carrier, you have a little bit of leverage in that market, but not a ton. In these blue markets, there is more outbound or more freight going out rather than in. So on these blue markets for shippers and carriers, shippers and brokers, you might have a little bit of trouble trying to find capacity for your shipments. Or if you do find capacity, that might be a little bit higher on the rate than normal. On the flip side for carriers, blue markets are really good for you. There is an abundance amount of options in the market, so you can be a little bit picky and choosy when it comes to freight. In the red markets, there is an abundance amount of capacity. So this is really good for shippers and brokers. You can be a little bit more picky when it comes to what time is this truck available, what is the rate, and how far away is that truck. That's when service is usually at its best and that is when rates are usually at the lowest point. Talking about for carriers, there's a lot of competition for you in that market. There is a lot of capacity. So when there is a lot of competition or a lot of capacity in a market, you kind of got to take what you can get to get out and get rolling somewhere else. So that's kind of how you read the haul market. You can also use it in a load board type of management way. So if you have a lot of freight available in a blue market, probably need to get those booked first thing in the morning, or even pre-book if you can. If you have freight in the red market, you should be able to get those covered no problem. So you can kind of prioritize your day based off of capacity in the market. On the left-hand side is our most volatile markets widget. This is great because volatility is where you can make or break yourself in this industry. On the left-hand side are all of our markets, our 135 markets, which is also all of these little squiggle markets. I have them sorted by market share. So the Atlanta market is almost 4% of all freight moving in the country. We measure 4 data sets: outbound volume, outbound rejection, head haul, and tender lead time. Outbound volume is very important because it identifies freight flow. Is there more freight? Is there less freight? That's important to measure volatility in. Outbound rejections measure carrier sentiment. Are rejections increasing or are they decreasing? If they're increasing, that's something that you need to be aware of to make the best decisions and understand that there might be price pressure. Head haul volatility is important to know where capacity sits. Is there more capacity, less capacity? Tender lead time is the shipper sentiment to the market. Sometimes when shippers feel a little bit of pressure, they are going to extend their lead times. They're going to ask for trucks earlier, more in advance. So you can keep an idea on what a shipper sentiment is by looking at the tender lead time. The bottom number on all of these is the most recent data point. All of those 4 indices are daily numbers, so you are looking at the most recent data point is yesterday. The top number represents the week over week change. So for example, I'll just look at Houston right here. Houston had a 3% rejection rate yesterday. Week over week, it's had a 1% increase in rejections. So over the last week, there's been about a 1% more rejections in that market. If it was negative, that would mean there's less rejections or more acceptances in that market. The only time there is a colored box that shows up is when there's volatility. We take a 365-day average for each market for each one of these indices, and if that data set or if that number goes out of its mean on 2 different thresholds, moderate and strong, based off of 1 and 2 standard deviations, that's when the box will populate. So all you need to know is when you see a green or a red box, that is out of the normal for that market for that index. So for example, Houston, a 3% rejection rate, which is very, very low, 97% acceptance rate, but week over week, we've seen an increase. Now, that increase is 1%, which is a decent size, but overall, it's still a 3% rejection rate. So it's not something to freak out about. It is something to measure and to see if you are feeling that in the market as well. You can see Joliet has an increase in outbound volume. There's also an increase in head haul. So these are markets where you can direct your attention to see what you can do to secure maybe more business, to make a little bit of extra revenue, and to work your day a little bit easier as well. You can use this to identify where you might have some struggles as well. Or any of those little boxes like I did on Joliet's outbound volume, and it will populate a chart. So this is probably why we see a little bit of increase. We have a 12% week over week increase in freight volumes. and it's out of its normal for this specific time. So you can see that big jump is relatively out of its normal based off of a 365-day average. So you can populate anything on this specific market, or I'm sorry, in the chart. What I like about this is you can quickly click compare, and you can sort this or try to figure out if this is pulling by van or by refrigerated. So if you want to know if this is van, you would simply type in VOTVI.JOT. OTVI is outbound tender volume, VOTVI is van outbound tender volume. If you want to look at reefer, you would type in ROTVI.JOT. And this will pull the difference between van and reefer. So reefer is relatively small for the Joliet market as of right now. So this increase is definitely coming from van freight. It's very simple to click and type in a couple different compares to quickly identify what is pulling that market up. The head haul on this side, I don't think I mentioned, this is all modes. So this is van, refrigerated, flatbed, all the stuff added in here. If you want to look at van and refrigerated specifically, comparing apples to apples, you can do that as well with a van haul. Oops. Van haul or reefer haul. The next thing I'm going to talk about is how you can look at Sonar to identify possible more leads or potential leads for more freight. This is what I call the van and reefer volume page. So this is a tree map. On the left-hand side, we have van, and on the right-hand side, we have refrigerated. So the largest volume for van freight is coming out of the Atlanta, Georgia market. The largest volume for refrigerated freight is coming out of the Salt Lake City market. The way you read tree maps is the top left is the largest, the bottom right is the smallest. There's other different ways that you can view this information as well. So if you have questions, like I said, reach out to Sonar Support at FreightWaves.com. The top number that you see, the percent, is the year-over-year change. So I have year over here right here, but you can change this to weekly change, bi-weekly change, monthly change to identify maybe a little bit shorter of a term, maybe it's a project relative to year over year. And if it's increasing, that means that market's been growing year over year. If it's decreasing, you can use it that understand that that market has decreased year over year. Although it hasn't increased or decreased year over year, it might have increased or decreased over the last month. So you can play around with those percent change time periods based on what you're looking for. The reason why I think this is important is because you can give your sales team a little bit of a better idea of what to go after. So Allentown, Pennsylvania, we see a 76% in refrigerated. If you are giving them the task to possibly grow by X percentage for the company, or maybe in a specific region, this will give them a little bit of an idea of where to target instead of just being blindfolded and sticking their finger on a map to go after those markets. Try identifying markets that are actually growing, that actually have more freight volumes, and you could possibly have a better chance to win business. On the flip side, I have rejections as well. So you can look at the tree map to identify what markets are growing or contracting on rejection basis. And why is that important? Because that is carrier sentiment. If rejections are increasing, those shippers might be feeling a little bit of pressure. So you as a carrier, you as a broker, if you strike when the iron's hot, you might be more apt to get into the door rather than wait until they're not having any problems. So you can be strategic in how you want to approach this as a sales type of environment by identifying growing and contracting markets and giving this information to your sales team. The last two things I'm going to go over before this is concluded. The next one is kind of a good view that I like to give to people to show on TVs in their office. It has one of the same indices that we've already covered, which it's on the left. Oops, I'm sorry about that. Sorry about that. The left-hand side is haul, which is what we just went over. Blue, more outbound, red, more inbound. And on the right is our WRI. This is our weighted rejection index. So the reason I like this, it takes the weekly rejection change. So what is that change in rejections week over week? So if it goes from 5% to 10% week over week, there's a 5% rejection change. It then multiplies that number by how big or small a market is. So for example, if the LA market has a 2% increase, that is going to cause more havoc in LA than it would if you were in Wyoming, because Wyoming is a smaller market. You would need more drastic changes in rejections for that to matter because the market is so small. So it identifies rejection percent changes, multiply how big or small that market is. So you can see week over week, we have all blue down here in the Southeast. This means that these are decent sized markets with a increase in rejection change. What's good is you can bounce this up to the haul map for capacity. And if you see markets that are blue on both, those are markets that have a lot of freight and that they're feeling pressure with rejections in the market. The last thing I'll cover before leaving is our seasonality calendar, identifying what perishables are in peak season when. Takes a little bit to populate, but we have all of our markets or states on the left-hand side, the product, which is underneath the perishables category. We have fruits and vegetables, herbs, Christmas trees, as of right now for the seasonality calendar. And then from January to December, it will measure low, medium, or peak based off of when that specific product is coming to fruition. So for example, Alabama apple season is August, September, October. You can scroll down and see, Louisiana has asparagus season starting February, March, April, May. So one is good educational tool for newcomers in the industry or a refresher for new markets for people that have been in the industry. Or two, you can use this also as a sales tactic if you want to go over specific produce shippers. There's a couple different ways, like I said, that you can use this. There's some filters up here that you can filter it down to a specific product or a specific market. But this is another great tool that you can use daily, weekly, or monthly to help yourself get ahead of these swings and seasonality changes in the market. We've gone over a pretty good base layer for Sonar and great to kind of get you started with the platform. If you have any questions or you want to do something a little bit more specific with your company, please reach out to sonarsupport@freightwaves.com. We'll be happy to set something up for you and go over these a little bit more in depth. Thank you so much for your time. And again, email sonarsupport@freightwaves.com. Thank you so much.